Okay, so this is oil. Now, we've got a deal book that goes strongly bid at the bottom edge here. I don't see any liquidity. There's some liquidity down here, so I'd be very, very keen on that, I suppose, at that stage. Now, I don't like the buy trade on oil, so I wouldn't really be that keen on it, but that would be where the buy trade would be. You can see that it's pretty much fair value trading on the way up. Doesn't seem as if there's any particularly strong storyline here. But when we start to move to the right-hand side here, take a look at the deal book, right? So all of a sudden you're saying, wait a second, that's gone massively offered. I'm going to be watching as we go up into liquidity, of course, but you know what's catching my eye is, of course, the sell orders here at 65 to 70s. You agree with that? So what's caught my eye is the 65.70, just the same way as this has caught my eye when it goes bid here. I'm going to be looking at that area there. And interestingly enough, this area here came from the deal book going bid the last time. So if you look at oil in the background here, take a look at oil here. You see what happened to oil here? Do you see it? You see when the deal book went strongly bid here, you see this area here, you'd have been looking in this area and saying, my God, I'm going to get long here, got to be long. Just find me some liquidity to get long into down here. But, you know, and obviously that's where those buy orders have refreshed behind, eventually refreshed behind for that big rip on oil back to the upside. You know, so when we see the storyline starting to line up here, there's the trade I'm looking for. Do you see it? There's a trade I'm looking for right there. Sell side only. And obviously the oil then collapses out of that hole at that point, 65s to 70s. We get a nice collapse down to 40s. We get a very strong storyline. And that's in line with, of course, that's in line with the sell side story that I want to trade on oil, because at that stage there, of course, that's the trade I'm looking to do. That was the trade I was looking to do at that point. You know, so when you're looking at the oil in those areas, you know, your job is simply then to execute. With sell side value, you know, you've got to try and be sell side, haven't you? With sell side value, you've got to be trying to be sell side, and we got sell side. I mean, it's been a good trade. It's been a nice, easy trade. We've made some nice, easy money on it. Anyway, looking at the oil chart, I don't see any chance of ever being a buyer just now. We've got sell side only business. We've been talking about the sell side this morning, all morning. You can see we draw this switch from yesterday. We got another hold below 62 evens. And the interesting thing about the hold below 62 was what? We talked about the trade in Twitter last night. We talked about the hold below 62, didn't we? So it's not like it's a hindsight trade. It's hours in advance, actually. And again, it's not many retail spaces that talk about these things in advance of them taking place. But you can see if we go back to the oil trade from last night, here it is here. You'll see 15 hours ago, 11:20 London time. As an example, the biggest unwind for Friday was 62.50, 62 evens. But that's not slippy. The unwind isn't slippy. So when you go up into these areas, it's not slippy when we go up into those areas. It's sticky when we go up there, right? It doesn't get slippy. However, if we get a hold below 62, we start getting a slippy hedge seller, don't we? Hedge sellers are slippy. So if we see the 62 rejecting, we're going to have confidence that a sell's going to pick up some nice slippy sells. Yeah? And that was, remember, this is sent out at 20 past 11. Last night, London, 20 past 11, London. This trade here takes place at 9 o'clock a.m. London. In other words, 10 hours later, we get a hold below 62. After a strong sell comes in here, we get a hold below 62. Now, I believe the market's going to get slippy. I think it's going to pick up some sell hedging. How do I know they're going to hedge the sell? Well, because the guys that are going to hedge the sell are going to be watching this very chart that you're watching right there, that sell value. So the guys that are trying to decide whether to hedge or defend this level, they've got nothing to defend it against. If they're going to defend it, they've got to find something on the other side of the spread. The spread's on the sell side. They don't have anything to hedge it against. They've got to sell it to or spread it against. They've got to hedge it. And if they're going to hedge it, it's slippy. And that's the slippiness that we saw that then came in from the oil. We made a lot of money on. It's crazy how the logic of this just makes perfect sense. We'll be touching on this today because it's such a massive story on the soybeans in the last 24 hours. It serves a really, really good worked example for everybody to really understand this trade. Any good, any good, any good, any good, any good. Remember, with the US shutdown, I'm more inclined to be watching things like the FTSE to make sure that the value is in it. Remember, we got short the FTSE earlier. Well, we got, so this is the FTSE. Look at that value, guys. That's crazy, isn't it? That is absolutely dumbass crazy. What did I shout when this was happening? I am not a buyer of top edges. Not a buyer of top edges. Remember, we talked about the spreads widening this morning in London, Paul? I know there's only a couple of people in the London session, but for Paul and some of the guys that were in the London session, I said that the problem we've had with the sell is that we've never seen a widening of spread. Is this not a widening of a spread here? I mean, buyers came in here and sellers came in at lower prices and then buyers dropped the price. Is that not a widening of a spread? Of course it is. It's a widening of a spread, but it's not just a widening of a spread. It's a widening of a spread with sell side value as well. So if the spread starts widening, the top edge gets tradable, yes? Of course it does. That's the whole point of it. And that's the whole point of it. And then, of course, if we can start getting a breaker to the downside, then we can start momentum selling it into that spread as well, can't we? So you can see that as a trade opportunity, there was an opportunity to maybe start working on the top edges if you liked it against that FTSE. If you liked it enough. Big if you liked it enough. FTSE's actually been quite a hard one to get back into as a buyer, but the last rotation spike lower, we managed to get a little chop at it into the US Open. We had to be careful, but the value still looked as if it was coming in on the sell side initially. We took a little press at 44s, we got back in at 38s long. Take a quick update on the FTSE here, you'll see it for yourself. So there's the, you really have to get candle for candle on these, but there's the sell coming in there. See how the blues dropping, the reds dropping, and the reds dropping. So that's the sell trade there for the squeeze. And of course, we've got day session lows resting right there. So we're going after that day session low for the squeeze. And when we run the day session low, we're now looking at the macro value. And if I'm now looking at the macro value, you'll notice that the blue line's been rising consistently. We also get the macro value coming in here as well. And I'm starting to work on the buy trade here from 37s. And obviously the buy trade works out quite nicely for a quick one to the top side. Now, I've not seen a massive expansion of value on the buy side. I've got a kind of conflicted picture here at the moment, so I'm not sure what I want to do. But the worst case scenario is I can put a stop at break even and just wait to see what happens. And that's kind of, I think, what we'll do. We'll just put a stop at break even and wait to see what happens. Gold still has buyers, buy side value in this, so I'm still reluctant to be a seller. But obviously, it's starting to expose a lot of buyers at really stupid prices. You can see the number of buyers that came into the 22s there. Well, that's a bit stupid, isn't it? That's just impatient people doing impatient things, isn't it? People who think they've missed the entire move higher, and suddenly they're panic buying at any price, and the market maker's just saying, well, if you're going to panic buy, I'm going to take your money and I'm going to rotate it back into liquidity, whether you're bullish or bearish, whether the market's, because I'm quite bullish this market. I think there's a fairly good looking chart on this at the moment. I don't see any reason otherwise. It looks like a good inflationary buy trade at the moment. And I don't see any real strong suggestion to do much else except try and stay on the buy trade, but too many buyers. There's no way I'm going to buy that stupid price. That's just that is just stupidity. And unfortunately, fortunately for the market makers, there's plenty of stupid people out there.